Hey, what's up, guys? I want to inform you guys a little something about trading. All right, I trade futures, and I teach a lot about what I do on a day-to-day basis. Okay, all of the strategies that I do, my entries, my exits, my profit, my live trading. Okay, but today I want to let you in on a little secret that most people do not talk about on YouTube. Okay, that's that trading is hard. All right, you're gonna have losing days. You're gonna have days you go on tilt, and even though you're profitable, and I'm a profitable trader myself, you still blow accounts. Okay, today I want to show you an example of how I had 3 losing trades, ultimately a losing day, but I'll show you the ins and outs of my trades, and how I am still able to survive my account after going through those losing trades. Okay, so today I had 1 break-even trade and 3 losses. And honestly, the first trade should have been, my 1 trade of the day, in and out, but I didn't take profit, and I'm gonna have to live with that. So we're going to go down here, and I'll stick to the 1-minute chart, but just so you know, I color code my fair value gaps. The red one here is the 15-minute gap, and the yellow ones are the 5 and 1 minute, and I indicate in the box to the right side of it that what time frame it is. Okay, so this was my first trade of the day. All right, we had 8:30 PPI news. All right, followed by 10 o'clock news today. Right, so I would usually wait first 15 minutes or so to take a trade, but I didn't take the trade at 9:45 because we had 10 o'clock news, so I waited for that. Okay, now everything is clear in hindsight, but in the moment I really didn't see many good opportunities. All right, and when price was escaping, it didn't really give me an entry model, the best entry models to enter. But here we go. All right, so first I'll go to the hourly. All right, now on the hourly, let's go on the hourly. So we have a 4-hour gap here. All right, from yesterday I saw price going to consequential encroachment of the 4-hour gap, and then coming out to the upside. So I had a bullish bias. Okay, and also yesterday we have this BPR. What BPR is, we have an hourly fair value gap to the downside, and then a fair value gap to the upside, and then where they overlap, that's the balanced price range right there. So we have that there. Price came down into it yesterday. All right, tapped into it and respected it. Okay, so that gave me kind of a bullish bias for the rest of the week, for Friday. All right, so let's go down to the 1 minute now, and I'll show you my first trade. So the first trade was after the 10 o'clock news. All right, we came down and tapped into the London sell side liquidity. All right, so we had sell side liquidity at 4:45 Eastern time. All right, this is the London lows. All right, so if you come here, you see that price taps into London lows. All right, at 10:30, and this is where I started to scout for my entry. Okay, so let me explain to you what this breaker is here. So we came down here. We tap this. Now, first, for a reversal, you would try to look for a change in the state of delivery. All right, but in this case, being that the last down close candle is all the way up here, a couple hundred points away, you want to wait for at least a swing high. Okay, so the swing high came in, making, forgetting about this part, making this a bullish order block. Okay, and then price came down, and once it now breaks that order block, creating a lower low. This now it breaks it. That's what gives it a breaker, but it don't turn into a breaker until it creates a new high. So once this became a high, that made this a breaker right here. Very powerful model right here, okay? And also being from this swing high, that is a change. You have a change in state of delivery. You have a breaker block right here, and you also have an inversion. This is an inversion right here with price closing above this inversion. Finally, a move of displacement for the day. This is why I get into my trade. Okay, I get in right here, stop beneath the inversion. All right, I wouldn't, but it's not a hard stop. I would get out of the trade once it closes beneath this gap. Okay, and I love this model. All right, and just to tell you once again, like, so many things aligned in this trade right here. Sell side taken, swing high. We came above the swing high, creating a change state delivery, also creating a breaker, also closing on the other side of this fair value gap, making an inversion. Okay, now it did shoot up. It actually shot up 109 points into this 15-minute fair value gap. Now, the 15-minute fair value gap, that's one of the, I would say, higher time frame biases that you kind of look for directional bias. It was my mistake that I did not take profit here, but the reason I didn't is because I only entered with one micro contract. I was really hoping for price to go into the next daily fair value gap above it here, which is like 400 points away. And if you've seen how this market has been acting this week, 400 points is really nothing for a move. But I shot myself in the foot not taking profit right here because I wanted more. That was my greed taking over, and I let price come back right into break even. I made no money off of this trade. Okay, no money. All right, so that was the first trade, break even, and then it was just downhill from there. So I really didn't want to take a trade after 11 o'clock. I said to myself, okay, I didn't get the first move, and it was kind of choppy action this morning. Let me just wait till the afternoon session. But then, right when I decide not to enter, price starts going up 300 points. Okay, so I'm like, okay, once price now went above that 15-minute fair value gap, which I use as directional bias, I see it displace over the gap, over the 15-minute gap, creating a 1-minute fair value gap, and then price goes back into it. I enter this trade. Okay, another model that I'm totally happy with. I don't think I made any mistake with this, but then it goes here and stops me out. Okay, so now I lost money there. Didn't lose money in the first one, but lost money on this one, just for price to just stop me out by 2 points. Okay, and then another good entry model here was this inversion right here that I did not enter in, and price went up and really went up another 400 points. Okay, now we have this other 15-minute gap right here, and then there's another 5-minute. It came down and kind of tested that 5-minute, but it respected it. I got in on this 1-minute inversion here, and once again price comes and stops me out again. And this was more like, and once again, the third trade I was happy with. Not so much this trade here, because this was more like a tilt play. After losing all those trades, I said, look, let me try one more kind of later on in the day, 3 o'clock. If you're gonna play a move for 3 o'clock, you might as well wait for the 350 algorithm. But like I said, I was on tilt. I'm only human. And this one chopped and just got me out right here. So one of my worser days, I was actually I was on a 2 week streak of winning days. Didn't lose in 2 weeks, but and the fact that I lost 3 trades today, with no wins at all, that was a little bummer. But hey, that's what trading is. Okay, I like to show the good and the bad, the pretty and the ugly, and tell you all the secrets, right? So no matter, since I've been profitable for the last couple of years, all right, especially with prop firms, I'm really happy with prop firms because I'm not losing my own money when I still like blow accounts. And yes, I still do blow accounts. It happens, right? You get some payouts. These prop firm accounts, they don't last. You're not gonna have them for years on end. Okay, you're gonna blow them, and what do? You just get another one. It's perfectly fine. All right, but over time, you just want to stay disciplined with your rules. Okay, one thing that I do when I may go on tilt, so I'll have my copy trader, after like 2 losses in a row, I'll take out the copy trader and just trade separate. Okay, so like if I blow an account, I'm not blowing all of my accounts. Okay, I'll never want to take that risk again. If I lose one, it's not that bad. I still have a reservoir of past evals that I can just activate the next day. All right, but what I want you guys to take away from this video, although I had these losses, okay, all of these plays had context with them. Okay, so I told you first off, I had a bullish bias because the 4-hour gap at the beginning from yesterday. Okay, price dipped in to the BPR yesterday. It respected it, and we started being bullish. All right, today price dipped into the sell side gap. All right, we got this breaker, and it even dipped back into the breaker. This is after my entry and exit from the trade. But then you see how it was the breaker. It was respected. Price respected this breaker, and then went up another 500 points. So you win some, you lose some. For your sake, for the trader's sake, hopefully you win much more than you lose. Okay, hopefully you guys like this video. Let me know in the comments any questions about any of the models that I use, the BPR, the breakers, the fair value gaps. What is your best model that you like, and what kind of videos do you want me to come out with in the future? All right, talk to you guys soon.